When you think about the world of accounting, what is it that really separates a good professional from a truly great one? It's not just about being a whiz with numbers, it's about integrity. So today, we're going to break down the ACCA Code of Ethics, which is the foundation for the entire profession's credibility. So, before we dive into the details, let's just start with a really important question. What do you think is the single most valuable thing an accounting professional has? Is it, their technical skill, their ability to analyze things, or maybe just a really, really good calculator? Well, the answer, plain and simple, is trust. Without it, all those numbers and reports are basically meaningless. And that trust doesn't just happen by accident. It's carefully built on the principles within the ACCA Code of Ethics and Conduct. This whole document is the framework, and now we're going to unpack it, piece by piece. All right, first up, let's look inside the code itself. We need to understand how it's actually put together and, what it's trying to do. You see, everything really starts from this one central idea. The ACCA Code of Ethics isn't just some optional guidebook. It is the absolute bedrock for all professional conduct. Everything else flows from here. So the code is really built on 4 key pillars. First, the basic requirement that you have to comply with it. Second, a set of fundamental principles that act as your guide. And then there's this really practical system for identifying threats to those principles, and then applying safeguards to handle them. Okay, so let's talk about those threats. Now, these aren't some abstract, scary ideas. They're very specific, real-world situations that could seriously compromise your professional judgment. Think of them as ethical red flags that you need to be on the lookout for all the time. And this is exactly what makes the code so powerful and so practical. It doesn't just point out all the problems and then leave you hanging. No way. For every single threat it identifies, it also gives you specific safeguards. These are actions you can take to either get rid of the threat completely or at least bring it down to an acceptable level. It's a complete problem and solution playbook. Okay, now let's see how this whole framework plays out in what is arguably the most critical area for auditors, the independent standards. This is where objectivity really gets put to the test. And yeah, this branch of the code it's huge, and for a very good reason. For an audit to have any credibility at all, the auditor has to be independent, period. It is a non-negotiable. So let's dig into some of the biggest threats to that independence. First up, financial interests. This one's pretty simple. You can't own shares in a company that you're auditing. And why is that? Well, think about it. Your judgment could easily be swayed by wanting the company's stock price to go up, instead of just focusing on the cold, hard facts in their financial statements. And then you've got fees. I mean, imagine if one single audit client makes up a huge percentage of your firm's total income. You might think twice before issuing a bad opinion, right? You'd be scared of losing them. And same goes for overdue fees. If a client owes you a ton of money, it kind of feels like you've given them a loan, which creates a really awkward financial tie. Gifts and hospitality. This can be a real slippery slope. A small token of thanks is usually okay, but a super lavish gift? That could easily look like a bribe, creating a feeling that you owe them something. And on the flip side, if you're in a legal battle with your client, being objective is pretty much impossible. The whole relationship is just broken at that point. This one covers all kinds of things, from being best friends with the CEO to having your spouse be the CFO at a company you're auditing. These personal loyalties, whether you realize it or not, can seriously cloud the professional skepticism that's absolutely required for a good audit. So this is what's often called the revolving door problem. If an auditor is maybe thinking about getting a nice job with their client down the line, it could definitely compromise how objective they are right now. To prevent this, the code requires cooling off periods, a set amount of time that has to pass before an auditor can take a key job at a company they used to audit. And what about providing other services to an audit client? Let's say your firm audits a company, but you also provide consulting services to help them set up their internal controls. Well, in that case, you're basically grading your own homework. The code puts really strict limits on what other kinds of work you can do for an audit client to stop that from happening. And believe me, the code gets into incredible detail. It covers everything from loans and guarantees to completely banning contingent fees, where your payment depends on how the audit turns out. It even lays out the exact steps you need to take if an independence rule gets broken. This level of detail is what makes the whole framework so strong. Okay, so we've covered the huge topic of independence, but the code's reach goes way beyond just the audit.
let's take a look at the final branch, which covers some other absolutely essential ethical duties.
So this last category wraps up duties that go beyond the audit. Now, it might look like a smaller section, but don't let that fool you. These principles are crucial for maintaining your integrity in every single part of the profession. This section boils down to 3 key responsibilities. First, confidentiality. That's your duty to protect client information. Super important. Then, conflicts of interest, like when your firm is advising 2 competing companies on the same deal. And finally, the rules of professional courtesy, when you're asked to give a second opinion on another accountant's work. All right, so as we start to wrap this up, I want to leave you with a really critical thought. It is so easy to look at all of this and just think of it as stuff you need to memorize for an exam. But that would be missing the entire point. This code is designed to be a practical tool, something you use every single day, throughout your whole career. It's the framework that helps you make those really tough decisions when the right answer isn't so black and white. I want you to think of it as your professional compass. When you're trying to navigate all those gray areas in the business world, this is the tool that always points you toward integrity, toward objectivity. It doesn't just guide your judgment, it protects your entire reputation. And that brings us right back full circle to where we started. The code is the blueprint for building and protecting that single most valuable asset we talked about, trust. So the real question isn't just about what's in the code. The real question is, how will you use it every single day to build that trust with your clients, with your employer, and with the public?